Chamber of Commerce. Also on the call is Marina Papanikolas and Denise Santora from GTRCC, and our chairman, Phil Brilliant from Brilliant Environmental. Also on the board, our board members here are Frank Monetti, Ralph Wolf, and I believe that's Jonathan Bergman. Jonathan is Jonathan Bergman. Phil, do you want to say anything? Do you have anything to say? It is Jonathan Bergman. Hi, Jonathan. Do you have anything to say?
I have nothing to say other than hope to see you all tomorrow morning at 7:45 at Member Connect. And, that's our, time to come together other than in this virtual world.
Yes. And regardless of what the Eventbrite sent out this morning, there is 56 people registered for our Member Connect tomorrow. So it's going to be a great crowd. So please, if you haven't registered to join us and you'd like to, please feel free to do so. So I'm going to jump right in. Just so you know, we are going to be recording this this seminar today. So if any of you missed it, or I will be sending it out after our event, and also will be on our YouTube channel. If you have any questions during the presentation, please add it to the chat and we will do a little Q&A portion after the event. So without further ado, I would like to introduce the gentlemen from CG Moneta, Tom, Dan, and Vinny. And they are going to be talking about incentives, cash flow, and taking the SH out of IT, which I think is such a clever, awesome name. So thank you all for joining us, and take it away.
Thank you.
Thank you. We appreciate it. I can share my screen, right? No problem?
Yes.
All right, cool. All right. Bear with me as I get this teed up. All right. Can everybody see that okay?
Yes.
All right, perfect. All right. Good afternoon, everyone. We appreciate you guys joining us here today as we discuss cash flow and incentives and taking the SH out of IT. Just want to introduce the CG Moneta team real quick. Vinny Gargione is one of our founders, managing partners. Tom D'Angelo is a regional consultant. My name is Dan Covell, also a founding member and managing partner. Today, we're going to talk or have a broad-based discussion on 3 specific subjects. And we promise to keep it brief. Act 1, we're going to talk about increasing cash flow through available specialized tax incentives. Act 2, we're going to talk about reducing costs on specific services within your business. And Act 3, we're going to discuss how you can leverage purchasing power to significantly reduce the cost of your telecom services. So all 3 discussions have one very important thing in common. They focus on cash flow within your organization.
We're going to start with some specialized tax incentives. In particular, we're going to discuss the benefits of like 4 specific incentives that may be available for your guys' companies. All 4 are going to create additional like cash flow opportunities and really should be looked into. We'll be discussing hiring incentives, including the Worker Opportunity Tax Credit, also known as WOTC, and the COVID Disaster Relief Employer Retention Credit, also known as ERC. To round out our discussion, we're also going to take a look at like an engineer-based cost seg study, property tax mitigation, and the R&D tax credit. Right. Let's just start this off with some of the hiring incentives. The Work Opportunity Tax Credit is not one, but several credits given to employers at a federal level for hiring qualified employees or American job seekers that consistently face barriers to employment. People are having trouble getting employed and stuff like that. Employers claimed over $1 billion annually under this program, and there's no minimum number of hired employees required for an employer to qualify for it. The average WOTC benefit per qualified employee is anywhere from $2,400, can be as high as $9,600. Keep in mind, the WOTC credits may be carried 1 year, maybe carried back 1 year and forward up to 20 years. After the required certification is secured, taxable employers claim WOTC as a general business credit against their income taxes. Now, this is important. Tax exempt employees, I know we deal with some nonprofits and things like that as well, they're going to claim this WOTC against their payroll taxes. It's imperative that an employer that apply for and receive certification, verifying that the new hire you bring on is a member of the targeted group before you guys can claim the tax credit. Here's a quick cliff note of who can qualify. I mean, you're looking at like qualified 4A recipients, qualified veterans, ex-felons, and like designated community residents. Some additional qualifying factors that they look at are like summer youth employees and SNAP recipients. But as mentioned, this is important. An employer must obtain certification that an individual is a member of the targeted group before you can claim the credit.
Next hiring incentive that we want to take a peek at is the Employee Retention Credit, or ERC. Part of the federal pandemic relief package, Congress updated ERC to encourage employers to keep employees on the payroll. So with continued expansions to the ERC, nearly every employer qualifies for this tax credit. Employers are encouraged to take advantage of this expansion, as such qualified employee can bring up to $26,000 to the employer. So let's take a look at who's eligible. If private employers and nonprofits that have operations full or partially suspended as a result of COVID-19 or have experienced a significant decline in gross receipts, startups can qualify, and employers who took a PPP loan are now also eligible to take the retention credit. Now let's take a look at how much the credit can be. For 2020, it's 50% of the first $10,000 in compensation, or $5,000 max per employee. For 2021, that bumps up to 70% of the first $10,000 per quarter, but just for the first 3 quarters. The fourth quarter was rescinded, or a max of $21,000 per employee. It's important when you're dealing with ERC or discussing ERC to involve your CPA. Your CPA is going to provide you any advice and consultation on how to best utilize the credit that you receive.
So hiring incentives can be complicated, so it's important to engage in an expert that has a proven track record in procuring the maximum credit for you. The same can be said if you own commercial property and want to explore lowering your property taxes. So in fact, property taxes are a significant source of local and state revenue. Property taxes make up approximately 39% of annual local and state business taxes paid, coming in at approximately $617+ billion. So anyone that owns commercial property understands when you write that check how substantial these taxes can be. However, there are ways to reduce these taxes aside from a simple appeal.
Property tax mitigation. This is simply a way to ensure that you're not overpaying, excuse me, for your commercial property taxes. To be ensured you're not overpaying, an industry specialist with extensive market experience in valuation, tax, and law should be retained. The service is typically very thorough, and it works to identify potential opportunity for refunds and/or reductions in your current property taxes. The firm that represents you can perform all the work on your behalf until savings are captured. That includes partaking in hearings for you and filing all of the necessary paperwork. When you do this, the immediate benefit of engaging this type of a firm in a property tax mitigation project is the reduction of taxes owed and the potential refund of prior taxes paid. The future benefit similarly would be a reduced tax burden going forward, producing an increased cash flow for your organization. Now, that's going to lead us to an incentive that both takes you to the future and allows you to travel back to the past, capturing cash flow benefits during both journeys. It's an engineer-based cost segregation study. It's a way to accelerate your depreciation schedule and capture a large cash flow benefit. So according to the IRC, cost segregations should be performed by qualified individuals or firms, such as those employing personnel competent in design, construction, auditing, and estimating procedures relating to building construction. An engineer-based cost segregation study permits commercial real estate owners to reclassify real property to accelerate the depreciation schedule. The reclassification results in a significant cash flow in both present and future years through considerably shorter depreciable tax life and accelerated depreciation methods. Personal property assets include buildings, non-structural elements, exterior land improvements, and indirect construction costs. The primary goal of the cost segregation study is to identify all construction-related costs that can be depreciated over a shorter tax life. It's typically 5, 7, and 15 years rather than 39 years for non-residential real property.
Final tax incentive that we're going to discuss is the R&D tax credit. Now, guys, just excuse the pun a little bit because the fact is this credit has been greatly expanded, even throughout the years. So, the R&D tax credit is a federal program listed under Section 41 of the IRC and is designed for taxpayers that design, develop, or improve products, processes, techniques, formulas, or software. This credit is calculated based on an increase in research activities and expenditures, and as a result, it's intended to reward companies that pursue innovation and increasing investment. The R&D tax credit provides an avenue to receive tax money back from prior years while also reducing current taxable income on a dollar-for-dollar basis. The credit provides much needed cash to hire additional employees, increase R&D, expand facilities, and more.
Overhead will eat you alive. The next part of the discussion we're going to pivot to is going to focus on business costs that are associated with certain services that businesses commonly utilize in their day-to-day running of the company. So when engaging a service provider, whether it's internet, phone, what have you, credit cards, most businesses will try to negotiate the lowest rates possible without hopefully sacrificing quality. As an entrepreneur, we're ultra sensitive to costs and basically anything that's going to influence our net revenue. So most of us engage a service provider and really don't think about the cost until the contract term's expired. Then we look at the costs. There are strategies that you can employ to reduce the cost of existing service providers without having to change the provider or be penalized under current contract terms. So today we're going to take a look at several of these services, including credit card merchant services, waste and recycling services, workers' compensation insurance premiums, parcel shipping, and corporate wireless plans.
Now, we all deal with credit cards. And I mean, it's like how many times have we had a merchant rep call us up and, wanted to talk to us and pitch a space in service and part like on your fee structure. I mean, we know that credit cards are carrying a lot of fees and they can be harmful to our bottom line. How many of you walk into a convenience store or gas station and only see a price difference for paying cash and not using a credit card? I mean, it's out there everywhere. The fact is this, we pay a heavy cost for the privilege of taking those cards as a payment. There are options though. And these options don't include having to constantly change your service providers or call your rep trying to negotiate a lower rate. There are companies that you can engage, or you can try to do this yourself with a little research. The first thing that you can do is correct the processing plan to reflect the most competitive plan type and rate. Companies performing this service for you tend to use formulated specific asks of the existing provider. These asks can be found by simple research, and honestly, you can just Google it. Believe it or not, though, some of the supposed non-negotiable fees can be reduced through processing optimization, where you can help qualify payment transactions at lower interchange rates by passing through additional processing data. You typically see the high success rates for companies that process credit card transactions where the card is physically not present. In addition, companies processing between $1 million and $20 million on an annual basis typically have the largest potential savings opportunities. But keep in mind though, for credit card present locations where the person there is actually giving you their credit card, there still may be significant savings. So now we're going to talk about waste and recycling real quick. I mean, look, just because of just how much time it takes to run our business, we generally don't take the time to really look at our existing service agreements, our current service levels once we procure that service. And this really tends to be true for waste and recycling. Overall, 80% of businesses that utilize waste and recycling services can benefit from a closer look at their costs. I mean, billing errors and overcharges can be found by just looking at your invoice, looking at service agreements and equipment and current service levels on a quarterly basis. The needs of our business are always changed. They're changing rapidly. However, we don't always associate these changes with triggering the need to really kind of review our existing services. We found that businesses with a minimum monthly waste and recycling cost of $500 benefit from hitting the pause button and taking a much closer look at their monthly invoices and service level agreements. These quarterly reviews can be outsourced to firms that specialize in this type of service. I mean, or they can be really completed internally. I mean, you guys can Google it too. I mean, Google's got a lot of information out there. Customizing your programs, such as, like increased recycling, tailored pickup schedules, and a correct size equipment all factor in determining if there is a more costly way of handling your waste and recycling requirements.
Workers' compensation premiums, they can be large depending on your industry. Our experience indicates that over 70% of all companies have been or are currently now being overcharged for their workers' comp premiums. It's a pretty large percentage. You do have options when it comes to lowering your annual workers' comp premium. Unfortunately, it can tend to be a little complicated. Usually after work comp policy ends on an annual basis, the insurance company is going to perform a premium audit. They're not the only ones that can play that game. You can too. And the most effective way of going about it is auditing your policy by reviewing the past 5 to 7 years of your classifications, your experience ratings, and your premium audits. Industries that have annual workers' compensation premiums of about $50,000 or above are typically most suited for an in-depth analysis of the policy. There's still some meat on the bone, $30,000 and above as well. In addition, businesses that have operations in more than one state are going to increase the opportunity of recovering a refund. As stated previously, you can perform an in-house audit, or you can reach out to a company that specializes in analyzing workers' comp premiums. And as a business, you can also lower your workers' comp premium by hiring the right people, comparing policy options, making safety a priority, checking employee class codes, looking for discounts, and even developing a wellness program. Parcel freight shipping is another large expense for certain verticals. If your business ships freight often and typically spends $300 plus per month, again, there's options for you to reduce this cost as well, especially if you're shipping with FedEx or UPS. These cost reduction strategies are usually best procured through an outside reduction firm that specializes in logistics. However, internally, if you were to do this, you can expect to see about a 3% hard dollar savings in the form of refunds and about a 7% savings in the form of analytics. And this is going to include having to analyze late deliveries, invalid surcharges, incorrect dimensional and weight charges tend to be very, very common.
You know, as anyone that has ever owned a cell phone knows, I mean, they can be expensive to operate. I mean, I know the costs have come down over the past couple of years, but a company wireless plan, including devices, can really be expensive. There are telecom expense management firms that work with businesses to reduce their overall cost of your wireless expenses. You know, sometimes they'll work with, you know, maybe changing carriers, but it can be time consuming and a large undertaking for some of the large organizations, but there are like available options to you guys by working with your current service providers and still reduce the cost of your services by 27 to, you know, up to 36%. And a large portion of these savings are derived from unpublished rates. They're leveraging unique rate structures and utilizing promotional discounts which carriers do not openly share in the marketplace. I mean, none of the unpublished rates, rate structures, or promotional discounts require any contract negotiations either. I mean, these savings are benchmarked and awareness driven, and anyone with knowledge can leverage them. You just got to ask. I mean, you can also set a benchmark of controllable spend and conduct a line-by-line audit while comparing overall industry rates and user base. This will also allow you to determine incorrect billing. An audit also provides you the opportunity to eliminate or mitigate overcharges from like international long distance, roaming, voice, and like text and data discounts.
Taking the SH at IT. Our final act is going to focus on telecom, cloud, and IT services, but more precisely how to procure these services and save a boatload of money in the process. For years, the process by which you purchased your telecom services was pretty straightforward. You need a phone, you call the phone company. You need an internet connection, you call your local provider. And if you need both, you buy a bundled offering. Pretty straightforward. However, there is a much better way to not only purchase the necessary services that are important to your business, but you can also save quite a bit of money in doing so. The first step that we recommend is just taking a step back, or more precisely away from the traditional way of purchasing directly. And instead, you have to find a consulting firm that's both vendor agnostic and has a strong track record. A trusted technology advisor can provide very important benefits when engaged. These benefits include access to a service provider portfolio, acting as your single point of contact rather than having to call multiple companies. Plus, they're not going to pressure you as a quota-based direct provider sales rep tends to do. And you get personalized strategy and solution planning and an expert that can work directly with your managed service provider, CTO, or CIO to ensure you stay cutting edge. This is all incredibly important as we grow more and more dependent on technology.
When you're looking for like this vendor agnostic trusted technology advisor, one of the first things you want to look at is their service provider portfolio. And we have a couple up here, on a PowerPoint. Are they able to connect you to your local internet provider for like a high-speed broadband service? Can they leverage their client base and purchasing power to kind of reduce your overall cost of service? Can they reduce your bill on a monthly basis? What type of companies do they represent? And are they truly vendor agnostic? I mean, having a robust service provider portfolio provides the opportunity to quote not just one, but several companies that serve for the services that you guys require. This gives negotiating leverage, as you can use price points in both negotiating your service and driving the monthly recurring charges down.
Power of a robust technology portfolio. A robust portfolio, service portfolio is very important. But then so is a diversified technologies portfolio that provides multiple options. And having an advisor or an advisory firm that can provide a wide range of service and access to the top names in the industry, it equates to you being able to aggregate the procurement and speed up delivery of your services, right? If you can engage a firm that can migrate your company to the cloud via Microsoft Azure, set up UCaaS through RingCentral, then provide a dedicated fiber circuit via AT&T, all while leveraging a buying consortium and increasing your purchasing power, save about 40, 50%. You compare that to having to go directly to each company, it gets kind of clear why it's so important to establish a relationship with a telco firm that's looking out for you while partnering to ensure reduced cost and resulting in increased cash flow.
So I know that was quite a bit of information for everybody that we shared. Can't thank everyone enough for spending the time with us. And we'd be happy to answer questions, like Danielle said here at the end, on the topics we discussed. And a recording of the presentation is also available, like Danielle said, should you want a copy. We'd really like to thank the Greater Toms River Chamber of Commerce and everyone that joined us. The end.
Thank you, guys. Thank you so much. That was an insane amount of information. Would you be willing to share your deck or? Yes,
yeah, absolutely.
Okay.
Yep.
So if you share,
when we were putting this presentation together, we tried to keep it, aware of the time, because there's so much information available to business owners out there.
We cut a lot out.
Yeah, we did. We cut a lot out. I mean, so we want to try to give you guys as many tools as possible, especially with the environment we're dealing with we're all in right now as business owners.
Right.
What's going to change? It's this way one way, but tomorrow it could be completely different. So it's as much information as it could provide you guys, but not overload you and give you those glazed eyes look. I mean, it's there's resources out there. You just, like I said, Google it. We've mentioned it a couple times during our presentation. Google it. I mean, Google's our best friend.
Right. Phil, do you have any questions? You always have a question.
You always put me on the spot.
Because you always have a question.
And I guess, I mean, in a nutshell, everything that you just laid out for us over the past half hour are things that you look at when you come and evaluate a firm. And so you're giving us insight right now as to what we should be looking at to really try to more manage our firm, and also better to money management wise too.
Yes, it's not specifically about us, because that's not what this presentation was for. Right. It's about, educating you guys and saying, hey, there are things out there that you can specifically look at to drive those costs down. And we try to kind of give you a broad overview of some of the things. There's a lot more out there, but again, we want to try to keep it educational and simple for you guys to follow along.
Yeah. I only asked the question because, some of the things you point out, I could easily say, I look at that every day. And I can't find a difference, a savings, or a better place to go. And I could, if I had the time of the day to spend time on Google, I probably would do that. But it's something that I was saying, it's a service you guys also provide. But with that, I guess if you had to say from your presentation this morning, if there was one thing to spend your time to look at, to better manage and save money in your company, what would that one thing be?
That's going to depend on your vertical. Totally. It's got to, because if you're a construction firm, your workers' comp is going to be through the roof. If you have a warehouse in Lakewood, you're going to pay 150 grand a year in property taxes. So it really depends on the vertical. The most effective way to go approach it, everybody's got telco services. I'd first take a look at that. I would definitely make sure that you're taking advantage of all the specialized tax incentives. And you guys are fortunate that you've got a fantastic CPA in this group, Moneta Standard. Those guys are the best. But it's definitely, I think, industry based. It's not something that you can kind of make a generalization about, if that makes sense.
Okay.
Phil, to kind of piggyback on what Dan said too is, when you're dealing with, if you have employee cell phones through your business and you have 10 or more, how often do you look at that bill? Seriously, really, you don't. And what we found that's probably a huge area of savings, because a lot of overcharges, plans intermingling, there's a huge potential of savings there. And like I said, it's not something you kind of think of top of mind, because you get that monthly bill every month. You're paying the same amount every month. So something like that kind of sticks out. The tax incentives I kind of really want to focus in on a little bit is the worker opportunity tax credit, the WOTC. Okay, with the summer coming up, we're a seasonal area. We know, so hopefully a lot of these businesses will be bringing on more employees. Take advantage of that. Okay, ERC, if you haven't talked about it, I know Frank's a great resource for that. So.
Thank you, guys.
Yeah. Oh, you're welcome. Tom, did you have anything you wanted to add?
Yeah, I would just say, based on, Phil, what you were asking, we have that value proposition, and on our website, the questionnaire, which is great, that due diligence questionnaire that finds the savings. You could just pick an area on there that pertains to you. Like, you don't have to fill every area out. Let's say you were looking at the telecom, or you're looking at tax incentives. So what's great is that's a free service. It's complimentary. And what happens is within 2 days, our back office, led by Dan, puts that together, and we review it with the business owner. And sometimes there is no savings, but if there is, we go over that, and it's a really, could be big in some areas, like they were saying. So that's a great point. It's right on the website, or, PDF, whatever way people like to do it.
And what we'll do is, if you guys can send me over the deck, I'll send out the deck with the link to the presentation today, plus your contact information. So anybody can get in touch with you in regards to, helping them out as well. Additionally,
so I have a question, if I could jump in, and a statement. You guys, a great presentation today, as was the one yesterday that we had. These guys are evaluating my my company, and pointing out things that we, as Dan said, we overlook. The cell phone bills, just in the course of doing business. If nothing else, it's an exercise that everyone should be doing this time of year, reevaluating their company expenses and trying to improve cash flow. But my question then is, do you guys work with nonprofits?
Yes, we do very closely, actually. We started actually in Orlando. We have a director of strategic partnerships at our Orlando office that is basically an expert in working with nonprofits. So yeah, we do.
Awesome.
Thanks, Ralph.
it might be,
Thanks, Ralph.
that might be also something for us to look at. We do have a very robust nonprofit community within the chamber, and it might be something I might ask you guys to maybe be guest speakers at our nonprofit committee meeting, and like really kind of tailor it to some savings for nonprofits as well.
Thank you.
Your pleasure. Anything you need.
Yeah, that would be great. Okay, is there any other questions? Anyone else?
They're easy.
All right, easy breezy. If you guys can get me that information, I most certainly will send it out to the group and anybody who couldn't join us today as well. And next month, we are going to be hearing from M&T Bank on how and why to apply for business loans and what is needed to do that and to do so. So Stacey Romano and her colleague from M&T Bank will be joining us then. And again, we have tomorrow, Member Connect, 7:45. I believe it's Frank Monetti is going to be our awesome sponsor. Thank you, Frank.
We're bringing chocolate covered pretzels.
Oh, perfect. Oh, even better.
I thought you were bringing cash for everyone.
That's nice.
No, actually, we're giving away 2 tickets to Exit 82's next play.
That's awesome.
Cool.
Awesome. We love it. So join us for Member Connect tomorrow, and you can hear from Frank and get some goodies. And again, it's going to be a great crowd, 56 people registered. So, come network with us. But thank you again, guys, from CG Moneta. We appreciate it. And I will be getting that information out to all of you. So thank you again. Have a great afternoon and a great weekend.
Yes.
Thank you,
Thanks,
guys.
Danielle. Thanks, everybody.
Bye. Thank you.
Everyone
See you in
stay
the
well.
morning.
Weekend.
Bye, everyone.